Hello and welcome back to the Satoshi Society YouTube channel. It is a Monday and we are going to be diving into the charts, taking a look at Bitcoin, taking a look at Ethereum, and yeah, talking about where I think the price is going to go. So if that sounds interesting to you, then please make sure you smash a like on this video. I also bring trades to this channel as well to you as the viewers. I do bring you trades. And if you want to see more trades, then please make sure you smash the like button as well. We've been on a really good streak recently. A previous trade, we made 120% profit on that trade, almost $4,000 profit in that trade. So, if you want to see more trades like that, then please make sure you smash a like on this video. But getting straight on into the video then, taking a look at Bitcoin on the 4-hour chart. Now, as we can see, we're still in this 4-hour range that I have been talking about for quite a while now. And as you can see, like I said on Saturday, the weekend was going to be very boring. And exactly, as I told you, the weekend was very, very boring. As you can see here, just some sideways consolidation. Just sideways consolidation, slightly towards the upside. I'm going to talk about that a little bit later on as well. But for me, what I'm looking at here is, we've broken towards the downside of this ascending parallel channel. That is, very, very bearish for me. We can also look at it on the bigger time frames and actually call it a bear flag as well, giving us a target of around $11,300. So that isn't looking good either. But we are, again, still within this range. So there is a possibility that we could actually hold support. Maybe if we come down to the value area low at $16,300, maybe even lower to $15,400 and $50. Yep. There's a major support level there as well, which has been tested to the dollar twice. So that is a strong, strong level that we do have to pay attention to. But right now, we are holding the support at the POC, the point of control. As you can see here, we got a wick down to the POC, and then we've seen a bounce. And then over the course of the weekend, we did get that consolidation phase. So right now, we're sort of just waiting for the volatility to come in. And the volume to come in, and whether that's going to be bearish volume or bullish volume will depend on where the price is going to go. For me, it's still looking more bearish than actually bullish. But we will have to see. Maybe the bulls could step in and push that price up. But I'm going to explain why I do think it's more bearish than bullish. And the reason why I think it is actually more bearish than bullish, and we are pretty likely, there's a higher chance, that we are going to break the POC at $16,550, come down to potentially the value area low, and then maybe even lower, coming and testing $15,450 again, which, of course, if we get down into this area here, we could be looking for a long position. However, if we smash through this and we smash through this support level here, there is a high chance but we are going to go down to that target that I have. The first target, 14,000. Then we're looking at, potentially 12,000, 11,000, and then 10,000 if we do break below this major level right here. But right now we're still within this range, so I'm still going to look to trade this range. Even looking for longs, even though I'm still very bearish in sort of the mid to long term, I still think we could go down to 14,000, 12,000, 10,000. I've still got those targets in play, but we're still within this range. And what I like to say is you trade the range until the range is broken. And if we're still in this range and we're looking at some bullish signs down here, a below value area low, testing a previous support level and forming some sort of bearish divergence, if we're getting bullish confluence here, then I will be looking for a long. We could see the price come up to the value area high again. Then we could be looking for a short position there, back down to value area low, and then maybe there you could either look for a long, or we could see the price actually smash through our invalidation levels, and then we see the price going much lower. So of course we're going to have to wait and see what happens to the price. But the reason why I think it's looking more bearish right now, and it's looking more probable that we are going to break the POC and come down to this area here, $16,300 and $15,450 potentially, is because if we go down into the smaller time frame, Taking a look at the 1 hour, we can see we're actually forming a range on the 1 hour as well, only a very, very small range. You could possibly trade this, but to be honest with you, the range is not big enough for me to trade it at all. Even with 5x leverage, it's just not even worth it. So for me, I'm not actually trading this at all. It's just not worth it. Putting fee when you add fees on top of it, it's not worth it at all. But we are in a range on the 1 hour here, as we can see. And I'm just using this to show me whether we are going to continue within this sideways consolidation phase or whether we're going to break this range on the 1 hour. If we break this range on the 1 hour, we're most likely going to break the POC on the 4 hour, which is going to mean that we are going to see Bitcoin come down to $16,300. If it breaks the value area low, then we could come down to $15,450. So we just have to be aware of that. So that's why I've got this small range here. I'm not trading it. As I said, it's not worth trading this because the profit would be so minimal. But yeah, what I'm looking at here on the 1 hour is actually another bear flag. So we're looking at a textbook bear flag here on the 1 hour. As you can see, we have the flagpole. Depending on where you take it from, the more conservative top of the flagpole would be here at around $17,500 because we've had a bit of consolidation here before that next leg towards the downside. So I would take the flagpole from the top here to the bottom here. And let's see what target that in fact gives us. Down to the bottom, taking it to the potential breakout point. This could give us a target of around $15,700, taking us close to the previous lows, which I will show you right here. These two previous lows where we've tested this level pretty much to the dollar. So it is going to be a major, major level. But this is one of the reasons, and this is one of the signs which is telling me that the price is most likely going to go much lower and at least come into this longing area here, which isn't a solid longing area as of yet. We would like to see more confluence once we're down there. Yes, we already would have two bits if we do get down there. We've got value area low, we've got this previous low here, but we do want to test this previous low. But we also want to form some sort of bullish divergence. For me, that's sort of the icing on the cake, that bullish divergence, because they do play out the majority of the time. I back tested this before. Bullish divergences, even bearish divergences. The strategy that I use, it has a 74% win rate. So there's a high probability that the bullish divergence would play out. But yeah, for me, looking at this bear flag right here, I do think we're going to go much lower. So if we do break towards the downside of this bear flag, then I am expecting lower. And I'm expecting that POC on the 4 hour to be broken, value area low, coming into this bigger area here where we could potentially look for a long within that area. So that's what I'm looking at for Bitcoin. Nothing too major to update you with there. I'm still expecting lower. I'm still expecting this range to be respected until we break $15,450 here. If we do break this, then there's a high probability that we are going to go much lower. That next target that I would be looking at is 14,000. Now, of course, we could actually break this, see some sort of fake out, and form some sort of bullish divergence, and then we could see the price move and continue within this range. So we would want to see volume on this break towards the downside. Or a retest and then a confirmed rejection. And then we can start looking at 14,000. But we'll have to wait until we get there, or if we even do get there, to sort of, do some analysis on that. Right now, we're just focusing on that 1 hour. If we break towards the downside on the 1 hour, then what is most likely going to happen is we break the POC, we come value area low, then we come into this area, and that's where we can start looking at potential long positions. And of course, if we do come into this area and there is a long position, you will be the first people to know about it. I'm going to put my money where my mouth is as well. I'll show myself on Bybit actually trading that as well. So yeah, make sure you have that bell notification on so you don't miss any of the lives. Moving swiftly onto Ethereum, sort of the same story with Ethereum, but Ethereum actually hit the price target, which I did give you. We were looking at this here, and I was considering coming live and shorting this area. Same with Bitcoin, but the short that I noticed, was around. So the price was around $1,340. That's where I noticed the short, literally at this top right here. But as you can see, the time was 7 o'clock on the 14th of December. That's when the FOMC meeting was happening, and I decided against trading this short here because I knew that volatility was going to come in, and I knew it was going to be a 50 basis point rate hike, as did everyone. And what what silly money tends to do is find this very, very bullish and push that price up. So I didn't want to get stopped out by the silly money who we're thinking that this is a very bullish thing. But my overall thesis was that this is not bullish. We're still the rates are still increasing. So it's not bullish, and we're going to see that price come down, and that's exactly what happened. And I said, if we broke value area low, then we're coming to value area high. We're going to come down to value area low at approximately $1,170, and that's exactly what happens. Now we're at value area low. We could be looking for a long position here, but there's not enough confluence for me yet. The only confluence that I see is, in fact, that we're at value area low. Okay, I like a minimum of 3 bits of confluence, 3 indicators telling me to either long or short. And right now, I'm only getting 1 indicator telling me to go long. So for me, I think Ethereum is going to go a bit lower because I do expect Bitcoin to go a bit lower as well. We've got this bear flag on the 1 hour. If that breaks towards the downside, we're going value area low and then maybe even lower as well. That is going to push the price of Ethereum down. We can see that Ethereum and Bitcoin is actually very, very correlated at this moment in time. Let me just get rid of this for a second. As we can see right now, Bitcoin and Ethereum are very, very correlated. Right, this is a Bitcoin 4-hour chart here. Okay, just look at that, and then look at Ethereum. Okay, almost identical. And as you can see, Ethereum is also forming a bear flag on the 4-hour chart as well. So we do just have to be aware as well, if we are looking at entering a long position from this area here, if there are longing opportunities, we do just have to be aware that we do have these bear flags as well, giving us much lower targets. So for me, the overall thesis is that if we do come down into this area, I will be looking for a long, but I'm going to be very cautious. And if I do see signs that we're going to break these the previous lows on Bitcoin and on Ethereum, then I will decide actually against trading that, because we could see the price move much lower. Now, as you can see here, we have this horizontal level at $1,071. This is, looking very, very similar, almost identical to Bitcoin as well. As you can see, we have this horizontal level, 2 touches of this horizontal level, literally to the dollar. Okay, Ethereum, we have the exact same thing. So for me right now, Bitcoin and Ethereum are very, very correlated. They are looking exactly the same. So whatever I do on Bitcoin, I'm going to do on Ethereum as well. So right now, the idea in my head is to look for a long here, but be cautious, okay, because we do have these bear flags forming. If they do break towards the downside, we could see the price just plummet and break this previous low from back here as well. So we do just have to be aware of that. And of course, again, I will come live and I will show you me trading this on Bybit if I do see a trade that is fit, as in a long position from this potential area here. So that's pretty much all I've got for you today. I will go through some of the comments now and see what's going on. But please make sure you smash a like on this video. Crypto Invest says it perfectly. Smash the like button. This content is free and takes hard work and dedication. Your fee, smashing that like button, show the love. Really appreciate that, Crypto Invest. It's really good to see you constantly coming back here. So if you could all just smash that like button, I would be really appreciative of that. Mr. New Creation, good to see you back here as well. Good day to all you warriors. We are in an insane bear market, but we are still here. Congratulations. Yeah, you've got to say congratulations and pat yourself on the back if you are still here. If you are still within the crypto market, then give yourself a pat on the back, because it's been very, very tough. And I do think it could get even harder as well, especially with the recession looming in the USA as well. That's not going to be good for us at all. So congratulations to everyone that is still within crypto. I know a lot of people would have panic sold and walked away and probably are never going to look at crypto again until it's back up to $70,000. Do you think there will be bad enough news this week to push it down to 11K? I know there's a lot of fun about Binance at the moment. To be honest with you, I'm not a fundamentalist, Ben is obviously going to be covering that. He covers more of the news side of things. To be honest with you, if there is stuff going on with Binance, then that could be the news that initially pushes that price down. But to be honest with you, I don't know. I don't know if there's going to be bad enough news. All my analysis is solely based off technical analysis. I don't tend to look at the news when I'm trading. Since this channel started, Ben has sort of got into my head that I should sort of be looking at what the Fed is doing, and I have been doing that recently. But I tend to just do my analysis off technical analysis. So to be honest with you, I don't know, but there is technical analysis telling me that the price could go to $11,000 if we break. If we break, where's this? Well, this bear flag here that's already been broken towards the downside. So yeah, if we get the volume coming in, bearish volume coming in, or we get a retest and a rejection, then we've got a target for $11,000, which is not good at all. Andre, come on, guys, give a like. Yes, I would really, really appreciate that if you could just smash that like button. AJ is our man. Thank you very much. I do really appreciate it. Crippy, good to see you back here as well. Still holding my short from $18,100. Still expecting lower. We'll continue to short the pumps. Yeah, that's an amazing, amazing short that you have entered into. And to be honest with you, I really wish I entered a short at this level here. But I was the short came as soon as the FOMC meeting was happening, and I knew there was going to be this scam pump towards the upside, and I was just a little worried that was going to stop me out. And then the price, I knew the price was going to dump. I knew it was, but all the technical indicators were telling me that the price was going to pull back from this area. But I just got that FOMC meeting sort of stuck in my head and thinking, I know silly money is going to get very bullish on this 50 basis point rate hike. And, it happens every single time. We have a scam pump towards the upside, and then we see the price come down. But yeah, the pump actually didn't go as high as I expected it to. So I do wish that I entered that short there, and it would have been, in almost 50% in a profit. But as I say, you can't dwell on a trade that you've missed. You have to move on because there's going to be thousands of trades in the future. What's the next level for Ethereum if we break down? Okay, as I said, the next level for me is $1,071 at this previous low here. We tested it there to the dollar. Here again, we tested it exactly to the dollar. So that is my next target if we break this value area low and we stay below that value area low. My next target is $1,071. If we do break that, then I do have... is the analysis on this one here? I did have a target for $800. I did have a target. I think it's on another chart, and I'm going to have to find that chart. But I do have a target for... Right, let's go on the weekly. I do have a target for $800. No, daily. This is the perpetual, actually. So... yeah, so I was looking at a support level down here. So around this area here, I'm looking at sort of the previous swing lows and where the next support levels are on Ethereum. Now this isn't the right chart, but I'm looking at these areas here, the previous low here. So if we do break $1,071, for me, I'd be looking at $877 as that next support level. So yeah, there are lower targets. I will find that chart. Let's just see. Actually, I've got it here. I do have a chart that does. Yeah, here we go. I think no. Yes, here 8. Is it on the daily or the weekly? Let's get rid of that. Where is this? Yeah, coming all the way back to 2017 and 2018, we do have a strong resistance level at $801 as well. So the first target I would be looking at is that $877. And then if we broke that, then I'll be looking at $800 as that next target for Ethereum. But yeah, right now we are holding support. We are holding support at the value area high. But if we do break that value, the value area low, not the value area high, we are holding support at the value area low. But if we break that $1,071, then if we break that, I'd be looking at that previous swing low, which is at around 877. Then if we broke that, it would be $801 where I'd be looking at the price coming to. So yeah, those are the levels that I would be looking at for Ethereum. Da, 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 da. Maybe pump it to be rejected from the 618 just to squeeze some shorts. Yeah, that's what tends to happen. That squeeze the shorts and then they start shorting themselves as well. What to do? What to do? Obviously, I can't give you financial advice, but what I am doing is sitting on the sidelines right now. I should be in a trade, but I decided against trading at. But yeah, right now I'm waiting. I'm sitting on the sidelines waiting for a trade. If we do come into this, let's go to Bitcoin. If we do come into this area here, then as I said, I'm going to be looking for a long. But if the signals aren't there, then I'm not going to take that long because we could see the price going much lower. And of course, I will go live for that as well. Congratulations for being deep underwater. I mean, my HODL portfolio is, I wouldn't say deep underwater. I say it's still above above the water because it's still in profit from where I first entered. We're still nowhere near where I first entered. I entered at COVID. $3,500. So I entered at a really, really nice price. So yeah, we are far from that. I'm not underwater. Our trading portfolio has not been underwater recently. We've been making really, really nice trades recently. So what was that? 10 trades in the past 2.5, 3 months. And two of them were losing trades. The rest of them were winning trades, so 8 winning trades. So we've been doing really well recently. Unfortunately, we did miss 2 trades. This one when I was ill, and this one because the FOMC meeting was happened. But as I always say, don't dwell on them. Move on. We look for that next trade. So do you think there isn't much of a chance of any pump? For me, I still think we're going lower. Just solely basing my analysis on the technicals, I anticipate we're going much, much lower than we actually are. Okay. Just a very, very basic chart here. If you've been following the channel, I've covered this a lot in the past. But if we break a major level, okay, if we hold support or we get rejected at a major level, what we tend to see the price do is actually go straight to the next major level. So we broke this level here. We found support at this level right there. Okay. And then the price came up to price discovery and established a new resistance level. Okay. Then what we can start looking at is these 2 major levels being very well respected. Okay. So we have the previous low here at around $32,000. Okay. The price came back and tested that level, found support off that level. After finding support, where did the price go? To the next major level. Okay, the previous major level, which was the previous high from here. Okay, and that's a resistance level there. Where did the price go from there? Okay, at that major level, where the price actually came straight back down to the previous major level before this one here. Okay, so this support level right there. Okay, and then we played around with this area for a little bit, and then we broke it. Okay, once breaking that level, where did we go to? Well, we came straight down to the to an older major level, okay, which was the 2017 all-time high. Okay, and that's what we've actually done now. Okay, we've broken a major level right here. Okay, so where's the next level that I'm looking at? Well, I'm looking at the next major level on the weekly chart, which is down at $12,000. So yeah, that's one reason out of the many reasons why I think we're going much lower. There's also bear flags, which chart is right here. So we also have this bear flag here, which is still in play. Yes, okay, it's been a very prolonged bear flag, but that target is giving us sort of close to $10,000. Okay, this is telling us that we could go to $10,000. This bear flag played out perfectly. Price target for that was hit perfectly. Same with this one here. This bear flag broke towards the downside. Price target was hit perfectly. We have another bear flag here. We've broken towards the downside. Yes, we haven't hit the price target yet, but I still anticipate that price target being hit because there are lots of signs telling me that there is a possibility. Volume is still decreasing as well. We had a bit of bullish volume come out when the FOMC meeting happened, but then it was followed up with a lot of bearish volume as well. So for me, it's still looking very, very bearish, and I still think we are going to go much lower. S&P 500 and NASDAQ looking bearish on the weekly. Trouble ahead for Bitcoin. Yes, I was actually going to cover this today. Thank you for reminding me, but yeah, S&P 500 looking very, very bearish. Okay, we got this major level here, previous support. I can actually change that to where's the template? There we go. So this is a resistance level now. What did we do? Well, we tested this. Let's get rid of the magnet. We tested this downwards trending trend line here. Okay, and we tested this resistance level here as well. Rejected from both levels, and now we are seeing the price come down. Okay, as you can see, this level has been respected throughout the bear market. As you can see, tested it there to the dollar, tested it there to the dollar again, tested it there to the dollar once again, and then this resistance level has been acting as previous support and previous resistance as well. And as you can see, we're getting a harsh rejection from that level. So where am I expecting the price of the S&P 500 to go to? Well, this support level here. Another reason why I'm expecting that as well is because we actually broke towards the downside of an ascending an ascending trend line as well. As we can see here, we were expecting this very well. We were in a nice uptrend, but we've broken that towards the downside. Now it's looking like we are going to see that price come down to sort of around $3,600, I would say. Okay, and then if we break that, that is very, very bearish, and then I would expect $3,230. Okay, I've been saying that for a very long time now. If we break this major support level here, we're going to $3,230 approximately. We haven't broken it as of yet, but there is a possibility we could if we do get down to this level here. So yeah, we do just have to be aware of that. What else? A lot of us are underwater. Yeah, I know a lot of people are underwater. And yeah, it is hard times. But you know, if you are underwater and you are still you are still in the market, then congratulations for not panic selling. Because it is very, very hard. I understand, you know, I've been in this for 3 years and I've had very, very good times, but also very, very bad times. I've completely wiped out 2 trading portfolios, and I'm sure many of you have as well. But you know, you learn from the mistakes. To be honest with you, I'm happy I got wiped out of 2 trading portfolios, and it wasn't even like they were small trading portfolios either. You know, and that was at the start of my trading career when I was over leveraging myself, being very stupid. I'm not trading how I trade now, you know, looking for confluence. Confluence is the single biggest thing within trading for me, other than emotion. You know, you got to completely wipe the emotion out of it, and make sure the amount that you're playing with is not an amount that you're going to be worried about losing. Okay, emotion is the first thing that I would say get rid of, and the second thing is confluence. And you know, we have courses coming out where I'm teaching you how I implement that into my trading strategy. Appreciate your honest analysis, mate. Yeah, my goal here is to be 100% transparent with you, especially with my trades, because I know a lot of people. And when I was starting out in crypto as well, you know, I watched YouTubers, and they're not honest with their trades. They're not transparent with them trades. You know, if they lose a trade, they sort of push it aside and don't really talk about it. The last trade I took was actually a losing trade. But what happened is we lost 10% on that trade. Okay. But the trade before that was 120% in a profit. Okay. And you can see there my risk to reward ratio is very, very high. So it is very good. So you know, risk to reward is very important as well. And, you know, as I said, out of the past 3 months, almost 3 months, we've taken 10 trades, 2 of them losing, 8 of them winning trades. That's an 80% win rate. So, you know, we've been on fire recently. So, yeah, you know, it's not all about winning every single trade. To be honest with you, a trader that tells you they win every single trade, to be honest with you, I think they are lying. But yeah, you just got to make sure you win more than you actually lose. And yeah, as I said, I want to be 100% transparent with all the trades I take. So that's why I come live and show you me actually entering the trades. Maybe I've already entered them, but the price is still sat at the entry point, and I will come live and I'll show you that I'm in a trade. I'll show you the profit. I'll show you me taking profit as well. And if I lose, I will tell you that I took a loss on that trade. Do the international markets seem to have opened well? Yeah, to be honest with you, I don't tend for I mainly trade on crypto. I don't tend to look at the international. Well, of course, America's international for me, but I tend to just look at the American markets because all I actually trade is crypto. I do have stocks, but I don't trade stocks. I solely trade crypto. So I just look at the American markets, and yeah, duh, 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 duh. I would say, what's this? I would say they really duh, duh, duh. I wouldn't say they're really losing trades. In the winning trades, the profit percent far exceeds the stop loss trades at 10%. Yeah, exactly. As for the news Friday, the PCR price index also Fed final policy announcement Wednesday. Yeah, let me just bring that up. What have we got coming in? Obviously, Ben is going to cover this. He is much more experienced on the fundamental side than me, as I am much more experienced on the technical side than him. So I'm sure he will cover this. But yeah, we do have in the next 7 days, we do have seven major events coming out in America. GDP growth rate. QOQ final that is going to be big as well. We'll see what happens there because that could, pretty sure that could be the decider whether we are in a recession or not. Core PCE price index, yeah, that's a big thing as well. PCE price index as well. Yeah, we've got a lot. Michigan consumer sentiment final as well. So we've got a lot coming out as well. So we do just have to be aware of that just before Christmas as well. So yeah, we do just have to be very, very aware of that. Outside of the Aussie markets, will Ben talk about this? Yeah, about this, yes. Ben is going to cover all of this. I'm pretty sure. I will double check with it, but double check with him. But he normally does cover all of this stuff for you. So, yeah, because it is very, very important stuff. PC price index. Yeah. Thank you for your words of encouragement. That's okay. That's okay. I'm here to help. Of course, I can't give financial advice, but I am here to help. I have lived through sort of the startup of a trading career. I have gone through that, and it is very, very tough. The first year, especially, is very tough. And all you got to do is make sure you are doing the right things. And I know a lot of traders out there, and a lot of YouTubers out there as well. They only trade off one technical analysis, such as a triangle pattern. Now, triangle patterns, they are very, very useful, but you need to look for confluence with them as well. um, Confluence is, one of the biggest things up there, and we do have courses that are going to come out. Of course, we do already have the free course. Let me just see if I can bring the free course up for you quickly. We do also we've got the free course out already, and we are going to have many, many more courses coming out in the future where I'm picking apart my trading strategies and talking about confluence, talking about all of the indicators I use in separate videos, talking about sort of emotion as well, emotion in trading. Yeah, and I think I've already said confluence. Confluence is a very big thing as well. Talking about them separately, but then at the end, I have just one video which puts it all together and shows you how I use it all together. So make sure you look out for that. I think it's going to come out early next year. But if you come onto the satoshisociety.com, click join the community, put your name, email in, the amount of time you've been in crypto, press submit, and then it takes you over to the free course. Now, the free course, it is slightly basic. It's I can't exactly remember what I put in there. I know market structures in there, trend line trading is in there, so there's a slight introduction to actually trading. Trend line trading is something that I use a lot. Let me just bring you an example here. Coming into Bitcoin, this is a trend line trade here. So we have this horizontal level here. It can also be a diagonal trend line as well, but this one's just a horizontal. As we can see, we tested it once to the dollar, we tested it twice to the dollar, and if we test it for the third time, there is a high probability that we could see a bounce off of that. So that would be a very good longing opportunity. Of course, we want to see confluence with that as well, to actually enter that long position. But also, yeah, as I said, you want to look for confluence. But what we tend to see on the third test is we tend to see a bounce. But then the fourth test, when the trend line becomes overcrowded, when it becomes overcrowded on the fourth touch of a trend line, that's when a trend line starts to become overcrowded. When it comes overcrowded, there's a higher probability that the price will break below that trend line. Now, of course, you can't just use this by itself. You have to look for confluence as well. You've got to look for market structure. You've got to look for potential bullish bullish divergence in this case, and maybe sort of a range as well. But we go through that, and yeah, as I said, we have a load more courses coming out. I know for myself, I have even maybe like 30 videos just picking apart my trading strategy. So yeah, that's going to come in Q1 hopefully of next year. When do you think we will bottom out? If it's, I to be honest with you, I thought it was going to be before the end of the year. I thought it could be potentially even in December, but now we're getting to the end of December and it's not looking too likely for me. So maybe Q1, Q2 of next year, we finally see the price actually come down to those. I say finally come down to those targets, but I know it's going to hurt a lot of people, but it also gives us great buying opportunities as well. 5x should be the max leverage. Yes, yeah, I do agree with you there, and especially in a bear market. In a bear market, I will never go over 5x leverage. Every single trade I've done over the past 3 months has been with 5x leverage, because I've been confident. Normally I would do 3x, but because I've been so confident on where the price is going to go, I have been using 5x, but 5x is a maximum. If you're using any more than 5x leverage, 6x, that's sort of okay. But, you've got to really, really have good risk management there. But 5x for me, I do not exceed 5x leverage in a bear market. And this was my problem when I first got into crypto. I was trading with 25x leverage, 10x leverage. And they can be very, very profitable, but they can also be very, very damaging to your trading portfolio if the trades start to lose. So yeah, you have to be very, very careful with that. In a bull market, 10x leverage, sometimes if I'm very confident on where the price is going to go, maybe I will decide to choose 10x leverage. But even with a bull market, I will never exceed 10x leverage. And in a bull market, I tend to only trade with 5x leverage anyway, unless I see the greatest trading opportunity, then I will enter potentially at 10x leverage, obviously calculating my risk as well very, very well. Most are saying the indexes are looking really good coming. Most are saying the indexes aren't looking really good coming weeks. Yeah, everything for me is just not looking too good at the moment. So we'll have to say, which basically means your analysis will defo hold weight. Yeah, obviously, you've got to use sort of technical analysis with fundamental analysis as well. For me, I still solely base my analysis off technical analysis because that's what works for me. But yeah, of course, fundamental analysis is going to outweigh the technicals sometimes. If the technicals are looking bearish, but then we get some really bullish news out, then those technicals are going to be completely wiped out. But yes, you have to also factor both of them in. For me, if recession, okay, the recession looming over America's head. The 10-year, sorry, the 2-year yield has exceeded the 10-year. I've showed you this previously. Let's just show an example here. This is a bit of an outdated chart. As we can see, it shows that it's only 2018, but where we are right now is somewhere down in this area here. Okay, this orange line is somewhere down here. And every time this orange line has been below this black line here, so below 0, this is when the 2-year yield has exceeded the 10-year yield. And every single time that's happened, as you can see within this grey box here, 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 it has led to a recession. So every time we've been in this area here, we have led into a recession. Let me just bring up, I've got the 2-year, I've got it saved here somewhere. I've got it saved. Let me just bring this up for you. Here we go. So this is the 10-year. The 10-year is currently at 3.533%. And the 2-year is at 4.195%. Okay. Now, say you were to invest your money for 10 years. Okay. If you were to invest your money for 10 years, okay, and then invest another lump sum of money in for 2 years, you would think, okay, that if you invested your money for 10 years, you would make more money than you would invest in your money for 2 years. But that's not the case. Okay, what we're seeing right now is that if you invest your money for 2 years, you're actually going to make more yield each year over than investing your money for 10 years. So you can see normally what we see is the 10-year exceeds the 2-year, but we're seeing the 2-year exceed the 10-year. And every time this has happened, I showed you on this chart here. Okay, this just shows when the 2-year exceeds the 10-year. When the orange line goes below the black line, that's when the 2-year is exceeding the 10-year. And every time that's happened, it's led into a recession shortly after. So we just have to be very, very aware of that. As you can see, this chart is outdated, but initially 2-year has exceeded the 10-year, so a recession is most likely coming. So we do just have to be aware of that. Bearish it is for me too. Still, very bearish. If we're going to get that recession, then we're going to see everything go down much, much lower. And even when the Fed pivots as well, Ben showed a really, really interesting chart. I'll see if I can find it on Twitter. Make sure you follow us on Twitter as well. We do give you some updates on there. I know he posted. Here it is. Here it is. I know he posted it on Twitter. So look at this as well. I know it's a bit blurry, but the majority of the declines in these bear markets occur after the Fed pivots. So look at this. So this is the S&P 500. Okay, as you can see here, this is the S&P 500. Of course, we've got these bear markets right here. But every time we've seen those major pullbacks are actually when the Fed pivots, okay? The Fed hasn't pivoted yet, okay? So when we see the Fed actually finally pivot, it looks, looking at this chart, it looks as though we are going to get another leg towards the downside, another major leg towards the downside. So we've got to be very, very aware of this as well. Those are just two signs right there telling me that the markets are going much lower. The traditional markets are going much lower, which is going to lead into the crypto markets going much lower as well. So, it's not looking good. These are just two examples, and there are many more examples out there as well. 2-year exceeding 10-year, that is very bearish. That's leading to a recession. We go into a recession, markets are going much lower. Even when the Fed decides to pivot, the markets go much lower as well. So it's just not looking good in general at all. The key is to be careful trading now with such volatility and have your stop losses. Yes, always use protection. I always use a 10% stop loss. And all the trades that I take, the majority of the trades that I take tend to exceed at least 20% in a profit. The majority of my trades, on an average, I would say most of the winning trades I have are around 50%. We had some really nice, 60% winning trades, 80% winning trades, 120% winning trades. But we also had some smaller trades. We had a 26% winning trade, and we had a 35% winning trade as well. So the average, I would say, is close to sort of 50, around 50%. But yeah, you want to have a stop loss in, and I normally put my stop loss at 10%. And of course, the way I trade as well, and I'm going to talk about this in the courses that we are going to bring out as well, I also have an invalidation as well. So an invalidation before it hits that stop loss. If it breaks above a certain level, maybe it breaks above a previous high, okay, there's an invalidation there as well. AJ, if you have time, compare the S&P 500 chart to the 2008 dump. Yeah, that's another one that I have been looking at previously as well. Let's see if I've still got it saved. I haven't looked at it in a while. I have not looked at it in a while. So what we need is the extra 200 MA. Okay, the only difference that I see is that we've come and tested that 200 MA. We've come and broke towards the upside, had a fake out. We've respected it there, to be fair. Let's see if we've got this 2008 scenario saved. This one doesn't go back as far. Okay, we're looking at the wrong one here. Let's have a look at this. Let's get that 200 MA on. There we go. Does this go back to 2008? Yes, it does. Okay, I actually haven't got it saved. Is it on here? Yeah, here we go. Okay, so this is what I'm looking at. I've got this tweet up, and I will go back on here and compare that to the present day. Coming back here, 2022. Where are we? Here we are. Okay, so what's the best one to look at? Let's bring this up here. Okay, so what we're looking at here is 2007, 2008. This is another indication to me, telling me that we could see the price go much lower. This was just before the 2008 crash, okay? What we saw, we've got the 200 MA here on the orange line, okay? We've been rejected from that, and we've also got this gray resistance and support level as well. You can see used it as resistance, used it as support, used it as support, resistance whilst we were below it, support whilst we were above it, resistance again whilst we were below it. What we saw was a rejection from the 200 MA, a break below the major support level here. Then we retested it, got a rejection, and we saw the price move much lower. This is 2021, 2022. We're seeing the exact same scenario. As you can see, they almost look exactly identical, okay? We used it as resistance, broke up, used it as support, okay? Continue to use it as support here before the break towards the downside. Then we used it as resistance, okay? Resistance a bit here again, and then we broke towards the upside. Now we need to come on to the more updated chart. So this is exactly what we are looking at here. Okay, so we have this this horizontal resistance level here, support and resistance level. Okay, we've respected it very well. Resistance, okay, support here, resistance while we were below it, broke back above it, tested the 200 MA here. Okay, got rejected from that, came back down. Broke below this resistance, this support level, sorry, tested it as resistance again, and then we saw the price move much lower. Now we're still actually respecting this resistance level here, okay, which, we've seen this same resistance level back in 2008, as you can see here. The only difference is in 2008, when we got the break towards the downside, we went straight down, okay, and that was a 2008 crash. Now, we haven't seen the exact same scenario happen. Yes, we have seen a rejection, we've seen a break, and then we've seen the market dump, but we've actually come up and retested that 200 MA, and we've tested that resistance level again, and it looks as though we are getting rejected from it once again. So again, this is still looking very bearish for me because we're still respecting the levels that we respected back in 2008. Okay, so we're still respecting those similar levels. So yeah, for me, this is just another indication that is looking bearish. And as I said, there are still a lot more bearish indications out there that I haven't shown you, and I have shown you in the past, but they just keep coming. More and more just keep coming. So it's not looking good. Mr. New Creation, thanks, mate. No problem. I love bringing this content to you. I find enjoyment out of this. To be honest with you, trading can be boring at times. If you're not trading and you're thinking about getting into trading, it can be very boring waiting for that trade. It's really exciting drawing out the analysis and actually entering the trade and then seeing that profit and that trade actually playing out. And it's not even the money that gets you excited. It's the planning behind the trade, entering the trade and actually seeing that trade play out is more satisfying than actually seeing the profit. It's really, really satisfying when your analysis it actually plays out the way you expected it to. It is really, really satisfying. So I love trading. It can get boring at times when you're waiting around for trades, or when your trade's in profit, but you're expecting more profit as well. It can get a little bit boring, and that's why I like making these videos for you and talking about analysis. It's fun for me. So, yeah, I'm glad you also enjoy it as well. Great analysis. You've earned my subscription. Thank you. Thank you very much. And a like. Yeah, thank you very much. Please make sure you all smash a like on this video. You can see we've got 27, 28 people in this live stream. If you could just all smash a like on the video, I would really, really appreciate it. But yeah, looking at Bitcoin, we're still sort of trading sideways. The volume hasn't come in as of yet. As I said, on Saturday, we were going to see the price just consolidate sideways over the course of the weekend. I remember a year ago when we would see major moves on the weekends, but we're not actually seeing that anymore because we do have more institutions where the market's more institutionalized. Can't get that word out. But yeah, for me, Bitcoin's still looking very bearish. We do have, if it's saved, we do actually still have the bear flag on the 1 hour. Okay, we're still actually respecting this bear flag, and if we do get the break towards the downside, then I'm going to look at the 4 hour, and it's going to look highly likely that we're going to break that POC, the point of control, at $16,550. Then come down to value area low at 16,320. If we break that, then we're coming below value area low, which is a great longing opportunity. But obviously, for confidence, from these two tests at $15,450. But I would be looking for some sort of bullish divergence down there as well to enter along position there. But if too many bearish signs come, I won't enter along. And, I potentially could be looking for a short position depending on what the analysis is telling me. So, yeah, Ethereum, exactly the same story. We've come into actually a longing opportunity here, but there isn't confluence. I want to see confluence before entering a long position. And all I can see right now is we're testing value area low. That's not enough confluence for me at all. I like to see 3 bits of confluence to actually enter a trade. So that would be, coming below value area low, maybe testing this previous low here and forming some sort of bullish divergence. Then we can potentially trade that up to value area high, as long as loads of bearish indications don't come in. So we do just have to be aware of that. And of course, if I enter a trade, if anything changes, you will be the first people to know about it. Yeah, it's been a very long stream, almost, 50 minutes as of now. So I think I am going to end it there. So often my analysis is correct to the point, but I have no courage to enter. This was a big thing for me throughout my training career as well. I went through a stage of that where this was after I wiped out my first account. After I wiped out my first trading account, there was a period of time where I wouldn't enter a single trade, but almost every single bit of my analysis was playing out. Okay, it was playing out perfectly as I anticipated it, but I was too scared to enter a trade. And this was the first year of actually trading, because I wiped my account out pretty quickly. I wiped my account out in about 3 months. I think it was 2-3 months, and then I reloaded the account up after making more money from the job I had at the time. And yeah, then I started trading, but I wasn't actually doing any trades. I was just doing the analysis and scared to enter the trades. I've been there, but the way I got around it was actually trading with an amount I didn't care about. So trading with an amount that I wasn't scared of losing and would help get all the emotion out of my trading. Now, I did that and the emotion was still there, but that was just the first step. Okay, because right now, any trade I make, I have no emotion in it. Even when I make a winning trade as well, I don't celebrate it. Okay, I move on and I look for the next trade. Yes, I get a bit of enjoyment out of it, but I don't celebrate it. I don't get really excited about it because I've done it hundreds of times now. Okay, I've made hundreds of winning trades, and it is exciting when you make a winning trade. But for me, I would say don't celebrate winning trades, because when you do get that losing trade, I feel like if you celebrate a winning trade, it makes you sort of hate yourself when you make those losing trades. But of course, yeah, only trade with as much as you can afford to lose. For me, I used to trade with 5% of my portfolio. Now I trade with more of 8 to 10% of my portfolio. What I used to do is I used to have 5% of my portfolio on Bybit. And then if I say I had 7% now of my whole portfolio, I'd move to 2% of that into my holding portfolio. But I've decided that I'm happy to move my trading portfolio from 5% to sort of 8 to 10% of my whole general portfolio. So that's what I sort of have right now. And yeah, for me, for you, I would, it's not financial advice, but I'd suggest doing the same thing. Just having a very small part of your whole portfolio in a trading account and trading that. And that's your first step of getting all emotions out of it. Of course, you're still going to have a bit of emotion in, but once you're making successful trades, then the emotion starts to just wander off, because like I've been doing and I've been showing you, the losing trades that I do have, the 2 losing trades that I had in the past 3 months, both of them were 10%. Okay, 10% losing trades, so that's 20%. But in one single winning trade, I made 120%. So as you can see there, it just completely wipes out those losing trades pretty much, as someone said earlier on in the stream. But yeah, just emotion. Get the emotion out of it. Use an amount, even if it's $50, $100. Just make it an amount that you're not scared of losing. And yeah, if make it $50. trade with $50. Okay, even if you're not making much at all, just practice with $50. Practice entering the trade. Practice, with even if the trade gets stopped out, practice getting stopped out. Practice putting that stop loss in, and practice making winning trades as well. And you're only going to learn. You're only going to learn, and that's what I did. I went head first into it, and I was sort of lucky with the time frame of when I got into trading, because I got into trading when COVID happened. So I lost my job because we weren't working. There was no way that I could work. So I was sort of forced into trying to make money online, and I went headfirst into it. And for me, it's played out really well. It's played out in my favor. I would not suggest going headfirst into it. It was just a really, really good time for me to go headfirst into it. Um, but yeah, you got to work your way. You got to work your way into it, and that's the same as me. At the start, I went all in. I went all in. Okay, and then I realized after I wiped out my first account, I need to be a bit safer. And then I wiped out my second account, and then until it was only after I wiped out my second account that I actually started making money. After I wiped out my second account, I was like, right, now I really, really need to, you know, cement my trading strategy, because I was making winning trades, yes, but my stop loss was, I wasn't putting in a stop loss. I was taking risks. I wasn't looking for strong confluence like I look for now. I was just solely, basing my analysis off one technical analysis tool, and that just does not work. Okay, bullish divergences. I used to just trade bullish divergences. Now it's a very, very good strategy, but it's a lot better with confluence as well. And I didn't wipe my portfolio out with bearish and bullish with divergences. It was actually just trading patterns, just patterns. Literally trading patterns was the way I wiped out my portfolio, because I was just trading one bit of confluence, one technical analysis tool. You want to use a bunch of them together to really cement that technical analysis. And emotion, get emotion out of it, and then you'll start actually seeing winning trades. And of course, early next year, as I said, we're going to start having those courses coming out. As I said, we got the free course. Where's that? Let me see if I can bring that up again. Where's that free course gone? I don't know where it's gone. Here we go. Let's bring it up again. So here, if you press join the community here, put your name, put your email, the amount of time you've been in crypto, it will take you over to the free course. And that gives you some basic insights of my trading strategy, looking for market structure, looking for trend line trend line trades, and other things as well. To be honest with you, I forgot what courses I actually put in there. I'll have to refresh myself. But I've been busy working on all the other courses. And those courses are going to pick apart every single bit of my trading strategy, and then at the end of it, put it all together. So you need to make sure you watch out for that. That's probably going to come out early next year. And yeah, that I've lived through it. Okay, I've lived through the pain. I've lived through two wiped out trading portfolios, and I've lived through the successful part as well of the trading, of the actual trading. Now, I'm no way near where I want to be in the future with trading right now. I'm still on my journey. I've only been in trading for 3 years, but I feel like I've accomplished that. The first two steps of your trading portfolio, of your trading career. Sorry, I've got through the heartbreak of wiping out portfolios, and now I am on the second stage where I'm consistently making profit on trades. I don't know what the third step is. I guess I'll find out when I get to that stage. But yeah, I feel like I'm nowhere near where I want to be, and I'm gonna be learning every single day. You're gonna be learning every single day. The best trader in the world learns every single day. So you just always got to remember, time in the market is is probably the best thing for you. Having a lot of time spending a lot of time looking at charts is something that really, really works for me, and is something that is necessary. You need to learn to actually read the markets. Exactly the same thing has happened to me in the past. That's what Crippy says. Yeah, I think it happens to every single trader. I think a trader would be lying if they said they didn't wipe out a trading account, at least one trading account. So yeah, just woke up from a nap. Good to see you. Good to catch up from the start. 5-star rated one. Good to see you back here as well. I like to see. I like it when I see you lot coming back and supporting me. It really, really does motivate me to come back and continue to bring these live streams, give these updates as well. This has been a very, very long one, but yeah, I've enjoyed it, and I hope you've enjoyed it as well. So yeah, thank you very much for watching this live stream. Please make sure you smash a like on this video. I do really appreciate it. DJ Dinger, thanks AJ. No problem. I do enjoy this. Just please make sure you all smash a like on this video, and I can continue to bring this content. I can continue to bring the trades as well for you. But yeah, I think that's all I've got for you today. We've been an hour on the stream, and it's gone very, very quickly. So yeah, time flies when you're having fun. But yeah, thank you very much for watching. If there's anything that changes on the charts, okay, right now I don't see anything changing as of today. But if there are any updates, you will be the first people to know about it. We're looking at this bear flag here. If it breaks towards the downside, we're going much lower. Potential longing opportunity. However, if there are bearish signs, then I'm not going to enter that long, potentially looking for a short position there. So yeah, thank you very much for watching. Smash that like button, Mr. New Creations. I will see you soon as well. Yeah, if you are new to the channel, smash that subscribe button, turn that bell notification on so you never miss a live stream. And yeah, I'll see you in the next live stream. Thank you very much for watching, guys.